Good afternoon. Is anybody out there?
I'm here.
Oracle trading up right now after hours. Hey, hey, hey. What's up, Ben? What's up, Nick? What's up, Indiana Dave? How's Indiana? Bandit, Anthony, TP. What's happening, Tate? Ryan C in the house. Bill K in the house. Francisco. What's going on, Eddie? Greg P. Scarlett. What's up, Eddie Vic? What's happening, Jonathan? All right, let's jump in. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. I got out of pins today that I was swinging over the weekend. I guess that's the only change on here. Look at that, getting lighter and lighter and lighter. 12 overnight positions tonight. So starting to feel pretty light, and that's great. That's exactly what I want. Following my game plan. We got a big week ahead of us. We got the CPI tomorrow morning. I meant to ask Pat. I don't know if Pat's still here and listening, or maybe he posted it earlier and I was caught up. Pat, do you have a expected move for CPI tomorrow based on what the options market is telling us? If you got that, I'd love to see it, or maybe you said it already. If you don't, you can expect me to call you later. So how did we close here? SPYs are up 0.86%. Qs are up 1.7%. IWM is up 0.4%. Yeah, look at that QQQ continuation, 1.7%. Pretty good follow through today, and the SPYs, which are up 0.85%, really gave us some confirmation on the bull flag. Let's message Pat. Hi, Pat. Hi, he was there. So we're looking at the expected move for tomorrow is about $3.50. Cool. All right, so that's so much more muted than like end of last year, right? Coming into those CPI numbers when the movements were just insane and the market was really pricing for it. It's really tamed down. But $3.50, it's what, like 0.75% in the SPYs, something like that. It's not nothing. So we'll see how that plays out. And obviously, if there's a big surprise in one direction or the other, we could get a bigger move than that. But yeah, you can see here on the 5-minute chart of the SPYs, which I have up, we got great upside continuation here today. So we've really now confirmed the bull flag. Obviously, the news events that are tomorrow and Wednesday, the thing about news events is that they can take your technical picture and just completely turn them upside down. So we'll see if that happens. But hopping over to the daily chart, I mentioned, so we rediscussed this morning the concerns that I had on Friday when we were looking at this beautiful looking bull flag setup for the SPYs, right? So we started off June with 2 really strong days. Real breakout. We confirmed the breakout above SPX 4200, which was such a big important level, and then we got 4 days of sideways price action. The ADMA caught up to the base of that sideways price action, and when technically do you usually get continuation of a bull flag for any market or stock on any time frame is usually when the ADMA catches up to the base of the flag, and that's exactly what we got. I did express some concerns that were layers of probability against the continuation of that bull flag. We want to keep in mind, I talk about this a lot, technical patterns have a very high probability of failure. I think depending on the pattern that you're looking at, usually anywhere from 30 to 50% of the time, technical patterns can fail. So it's not enough just to memorize what these technical patterns look like. We also want to understand the other pieces of information that are out there that can add to or take away from the probability of that chart pattern actually being successful. And I had some concerns on Friday. Excuse me. I expressed those concerns again this morning, though Friday's price action being a little bit more of a rest type of day actually helped to alleviate those concerns a little bit today. So the question for today was, can we actually get technical follow through from this market, or are we just going to rest a little bit further and the market doesn't want to be placing new bets right in front of the CPI and the Fed? That was more my thought process. I thought we would have a higher probability of a rest day. We did get continuation today, and that's also not surprising. And the thing that we really discussed was, let's pay attention to relative strength and relative weakness during the trading day to try to identify opportunities should the market actually give technical continuation that the technicals are set up for, again, with this beautiful bull flag with the ADMA caught up. And that's what we got. You know, Friday was an interesting day because we had a doji candle by the end of the day on Friday. We pulled back off those highs, but we closed just about exactly at 430. So it was kind of hard to say if this was confirmation of the breakout going or if this was failure of the breakout. It seemed like it was like right in between. So today we got our clarity that it really was continuation. So at the close here, we got the SPYs approaching 434 with the ADMA at 427.82, if I can read that number correctly. So just call it 428. So we got, you know, $5, $5.50 or so of extension in the SPYs. It's not so bad, but we'll see what happens with the CPI. Qs also looking fantastic. They did not look extended at all coming into today's trading session. We had this great and needed technical pullback on the 7th that was followed by an inside and up as the way to negate this. And by the way, inside and up is one of my favorite two continuation patterns of trends. I love this technical pullback into the equilibrium zone, followed either by a continuation hammer or by an inside and up. In this case, it was that inside and up. Similar to the SPYs, Friday was a little bit of a looser candle. We didn't close on highs, we didn't close on lows, but today we got great continuation. We got tech leadership again. Q's up 1.77%, just phenomenal. The IWM here, less extended every day, right? Every day that this thing goes sideways after the big move that it had on the 6th and the 7th, it becomes less extended. So coming into today, it was like, okay, IWM's still a little bit extended, but now we've had a couple days to rest and digest that extension, which was one of my concerns on Friday morning, that the IWM was still too extended to continue. But now after 2 days of rest, I think at the open we had $2 of extension from the ADMA on the IWM. You're set up to be able to hold in or be able to continue better. The interesting thing today was the flip on relative strength and relative weakness intraday. Immediately off the open, the first like 7 minutes, the IWM was weakest. And there was like a couple flips today. It was interesting. The IWM was weakest for the first like 7 minutes. That tends to be not what I want to see if we're looking for good breadth from the market. If we're looking for a broad-based market rally, I really want to see that the IWM is participating. But since the Qs are no longer as extended as they were, and if anything the IWM is what's slightly extended, it wouldn't be the end of the world today to see tech relative strength. So the biggest thing that I was looking for and what we discussed in the morning meeting for today's trading session is, where's that relative strength and relative weakness going to be? If the market does look like it wants to give technical upside continuation, where can I focus? And I want to focus on what's strong. And it was tricky because we had these intraday strength and weakness flips. First 7 minutes of the day, it seemed like the IWM was weak. And the Russell actually even broke Friday's low. You look at what the Qs did off the open, they gapped up and went sideways, which was healthy. And then the IWM created this big tail pivot low, broke highs, and by the 950 bar, was extremely relatively strong, right? Broke up, gave this weird kind of inside 5 continuation hammer at 945. And then really confirmed that small time frame breakout, getting above new intraday highs, and just really lifting off. Now look at 950, the IWM versus the Qs at 950. Qs weren't doing anything. They were kind of creating some intraday support. They were barely holding on. And then at 10:05, when the IWM was still basically resting and giving continuation, the Qs actually started to break lower. So first 7 minutes of the day, Qs relatively strong, IWM relatively weak. That flips. IWM takes over, has a massive upside move, but then KeyBank kind of came in and ruined the party for, like, look at what KRE was doing, right? When the IWM took over that strength, KRE was just ripping, getting back above $44, which is a key level on the daily chart, going back to immediately post the SVB crisis, so going back to like April. That 44 has been a pretty big, important resistance level. So on the intraday this morning, same thing, KRE, couple days of rest here, just totally exploding higher, taking off, leading the market. This is actually what I want to see. If I see KRE going, if I see financials going, if I see XLE improving. XLE was the weakest sector pre-market, gapped down pretty big when everything else was gapping up, and totally ripped higher and filled the gap. If I'm seeing all that, I'm probably looking at an IWM that's going as well. And that is exactly what was happening. Things are looking good. And then I think, I don't know if the CEO of KeyBank was talking at a conference or where he was talking, or she, I don't know if it's a he or she, where the CEO was talking specifically. But whatever the CEO said just wrecked this thing all the way down here at 1020, which also wrecked the KRE down, which also really brought this IWM lower. And I remember looking at this pullback in the IWM here, being like, I really don't want us to lose 185.31. And we kind of ticked below it, recovered back above. But the rest of the day, the IWM never really regained that opening strength. As opposed to, if you look at the Qs, which had weakened out at like 10.15, 10.20, they had this kind of intraday breakout at 11.30 that just led to this upside grind and then eventually led to a really strong close. So in sum, the market gave the big picture technical continuation that we were looking for. The idea of looking for what's relatively strong and relatively weak is been a really good, consistent idea for being profitable over the course of the last year and a half here. But it was a little bit tricky to read because the IWM and the Qs were flipping back and forth on that relative strength and relative weakness. Just when you're thinking like, okay, it's a regional bank day, it's an IWM day, XLE holding 80, ripping off the open, filling the gap, just when you think that, a news event happens with this key, totally changes the picture, and the next thing you know, the Qs take over real strength. I was concerned when the IWM was selling this hard and the Qs were still weak, that, all right, you know, it's going to be it. We're not going to get any continuation today, and we're just going to have to wait for CPI to see what happens. And I'm a little bit nervous. I'm a little bit nervous about the CPI and this Fed event just because of how much we've been brought up into it, to be honest. I've been saying it for over a week now. I don't think that Jerome Powell can be looking at this market and is being excited about what he sees as far as how strong this market's been and any subsequent wealth effect that's coming from it. But that's kind of where we are at the end of the day today. So it was a really strong day. I personally traded very light. That was my game plan. I'm going home very light again. It feels good. It feels good being light going into CPI, unlike a couple of the CPI events back in the end of 2022 where I was going in really heavy. I'm really light into tomorrow's event. I'm really light into Wednesday's event. It feels good. It's been a great continuation from this market. As a team, we've 100% been on the right side of it, and we've 100% been on the right side of the rotation and how the rotation worked as well. So if you guys have also caught good moves. From a day trading perspective, I really did not do very much in the beginning of the day today. Eventually, Pat called out upside extension trades for CCL and NCLH that I got involved in here at around 10:20 or so. Caught this pullback, got entirely out of the position into that downside move. Same thing with NCLH. Made a couple bucks there. Eventually, I bought the dip in this KRE on this candle here. The volume kind of increased. It was extended to the downside. It was also getting to the 80 MA on the daily chart for the first time in a while since it broke higher. So I nibbled some around 42.25, but that was just for like a equilibrium snapback trade. Made a couple bucks in that. Got a little bit more out of JP Morgan. Made like $1 in JP Morgan off this bounce on the upside. And that was it, you know. So just and I lost a couple of dollars, very small, in this AUUD that I tried to scalp long in this wedge here. Was it here? Yeah, it was here. In this wedge here, when this wedge was really kind of tightening up on the 5-minute. I don't like these stocks that are $1 as a rule. I just don't like trading them. Unless I think I can get like 100% intraday move in a dollar stock, I usually don't like being involved in it. Otherwise, they're just too cheap to move well enough to pay me. But the way this thing was moving, and with the news, with I think with Meta AI partnership, I don't know, it was all the right keywords for this thing. Where I thought, all right, I can come in for small risk here, and maybe if I can enter this as a scalp and it breaks up, I could have a lot of size and make money on it. But I kept it super tight. I didn't get my fill to cover my risk by 1 penny in this move at 115, and then it pulled back and stopped me, and I lost a couple bucks. But net, pretty good day for me, especially because I'm still swinging this S, and S got upgraded this morning, so it gapped up really big, and I still have a decent sized position in this SoFi, which is unstoppable right now. This thing is just ridiculous. The probability of this thing doing what it did today is very low. Volume's increasing, but you get this big of a move, you have this degree of extension on the daily chart, and then you get a shooting star candle on increased volume. The probability of breaking that high the next day is very low. But it did it, and I'm still long. So those names really helped my P&L today, just from a swing perspective. Had a couple cute little day trades I didn't do a lot of risk on, but made a few bucks on it. And net, it was exactly the day that I was looking for personally. I was conservative, but I was able to make money, and I hope that you guys did it well also. Oh yeah, I wasn't involved in that CCJ, but that was also a great call. Someone brought it up in the morning meeting. I don't remember who, but it sounded like a few of you guys were involved in that one. Nice bull flag here. I think, even though I didn't get involved in it, I called out the long versus this 950 low on the flag as it was forming. So that was a pretty nice trade for people who got involved in it. Beautiful bull flag for some of these uranium names. URA gave, that's the ETF, gave the inside day and up. CCJ inside day and up with bull flag continuation. Another perfect bull flag here, right? ADMA catches up to the base. Inside day. I love when you have an inside day at the end of a bull flag, because it acts as the final tightening part of a tightening pattern for continuation there. So that one was also really nice. A great call out. But yeah, that's all I got. I'm happy to answer any questions that anybody has. First thing I'm seeing here is a question on Plug. Am I still in it? No, I'm not, unfortunately. Plug gave a sick move today. I had a bid, so I got out of this thing end of last week. I forget exactly which day. Somewhere around $9 or above $9 in Plug. And I had this nice little move. I wanted to rebuy to get back involved on a retest of 9, especially with the equilibrium area there. So I had a bid in. I put in actually pre-market at $9.06 to get re-involved, and the low's $9.10. So I didn't get filled, and then phenomenal squeeze higher. We're seeing a lot of these kind of garbage stocks continue to squeeze. Carvana was another one. I was looking at Carvana if it could dip a little further. I was long for most of May. I shorted it a couple days ago. That was a battle that I neither won nor lost. Ended up kind of break even on it, up a little bit. And I wanted to get back actually to the long side, and I tested the ADMA on the daily. They came out with that short seller news this morning, which I thought short sellers stopped announcing their shorts in 2021, when the Wall Street Bets community was targeting anyone who said that they put it on a short position in anything. That's why Andrew left. Citron stopped posting his shorts and said, during 2021, I'm only going to be telling people when I take long positions going forward publicly. Which, to me, I thought that was great, because forever Andrew Left would announce a short position, and, some of these people, it's like all they need to do is announce the position on CNBC, and then the position automatically would move 15% in their favor. It's like, imagine that power. You announce the position, and then you're automatically right because the market moves in it simply because you announced it. And then the opposite was happening to him in 2021 in the bubble, which was just fantastic. And it was, I'm not going to announce my shorts anymore. I'm only going to announce my longs. I thought that was hysterical. From Kyle, do uranium names tend to be decent movers? Like, for example, today there was no news and was just curious if CCJ is a type of stock that can move without news. Yeah, it can. I don't have a ton of experience trading them. I've traded CCJ a bit in the past. I found the name to be tricky to trade back when I was trading it. I was trading it like in this area in here back in 2022. Yeah, this is really big resistance as I scroll out here that this thing is in now. It's like $31 to $32 area. So I don't necessarily think that they need news. They need interest. And remember back when I was trading it and back when it was giving this move here, the chatter was with Russia and Ukraine and the natural gas situation and Europe moving away from Russian natural gas, that Germany was going to have to reignite nuclear. And I think that actually turned out to be almost the opposite, where Germany is still not really taking natural gas from Russia, but also announced that they're shutting down all their nuclear power plants, which they had already planned to do. So that idea turned out to not be correct. That was the thesis at this time, though, that created that run. So I don't follow closely enough to know. I'm sure I could reach out to Stefan and he would know. But I don't follow closely enough to see exactly what's going on with these on a day-to-day basis outside of the technicals. And the technicals were just really nice here for continuation. Oh, CCJ, there was a note. Oh, Cuppy. That's Stefan's friend. So, yeah, it makes a lot of sense. Awesome, Aria, awesome. What else, gang? It's Monday. Hit me with some questions. I got nowhere to be for a little bit. Let me check on the YouTube. YouTube's quiet. Since I'm on the YouTube, I'll give it a thumbs up. I'm gonna let the thumbs up my own video, right? Anything else, guys? What do you think about 3x leveraged products like FNGU and TQQQ? I don't think I've ever traded this FNGU. It's the FANG one, right? I mean, I think it depends on what your goal is of trading them, right? So, you want to make sure whatever ETF is that you're looking at, that it's liquid enough to actually trade it, that the spreads are tight. So I like trading TQQQ probably more than trading QQQ, definitely more than trading QQQ. I like the pricing. So just for me, I prefer to focus on stocks ideally between like $10 and $150. They tend to be more liquid. I can get in and out more easily on them. QQQ and SPY are obviously super liquid, but they're more expensive. So what ends up happening is I can take a lot more tier size in a TQQQ than I can take in a QQQ. And that tier size for me equates to more game planning flexibility. More game planning flexibility tends to create more profitability for me. So I would prefer to trade a $38 QQQ ETF as I'm even watching the Qs than trading the actual Qs. So I usually go to TQQQ, I go to UPRO. You got to be very careful about being involved to the long side in leveraged ETFs for longer periods of time because they decay. Meaning, like in theory, you would think that, you know, every time TQQQ goes up 1%, that QQQ goes up 3%. No, did I say that backwards? Every time QQQ goes up 1%, that TQQQ goes up 3%. But it's not actually true. Every time QQQ goes up 1%, TQQQ goes up 1% less a degree of decay. And that decay just comes from the way percentage math works. So if you're just day trading them, that's fine. If you're trying to hold these for long periods of time, then that decay can become pronounced and it can actually lead to a large performance drag on the product. So I don't like it for more than shorter term trades. And I generally prefer to short leveraged ETFs, especially if it's a day trade, than to go long them. Like TQQQ is my go-to when I want to short. Like I don't buy SQQQ, I short TQQQ. Especially if it's just going to be like a day trade or maybe like a 1 to 2 day trade. And I've never done the math on this. I say this all the time, so maybe one day, because people ask me about it a lot and I say it all the time, I'll actually try to figure out the math. Is it better to go long SQQQ? If you want to short the Qs, is it better to go long SQQQ or is it better to short TQQQ? The answer to that question is a balance of the overnight borrow cost on SQQQ versus the decay difference between SQQQ and TQQQ, and I just don't know. I just don't know the answer to that. On a day trade, TQQQ is easy to borrow, so I don't have to worry about any loan costs. So if there's any degree of decay, it makes more sense to be short TQQQ than it is to be long SQQQ, even if it's very, very marginal, which it probably is. On an overnight basis, what costs you more money? It would be the decay coming from SQQQ long or the overnight borrow cost of having TQQQ short. I don't know the answer to that. Maybe one of you guys will research it for me. That'd be cool. Cool. From Ben, I have an easy time generally understanding the thesis in the morning and the different outcomes for the day, but a tough time seeing when the trend identifies itself and only when that outcome played out after the fact and missed the trades. For example, what would have been the moment today that signaled to get long the Qs? What would have been the technical trade if you were patient off the open? Yeah, to be honest with you, the Q's breaking higher like 11:30. I'm gonna miss that move a lot because that's the time of the day where I'm not looking to trade. I really do not trade very much between 11 and 1, 11 and 2, and I do that because of what statistics show. The statistics for my own trading and for the trading of the team at large, as I've seen them, show that we don't perform well and tend to give back money between those hours. So it doesn't mean never trade between 11 and 2 or that I never trade between 11 and 2. I do. I just become extremely selective between that time of day. I'm more focused on just position management of the positions that I already have open. If there's a news event that happens midday, obviously that changes that, but I don't do a lot. The only real technical setup here for the Qs to capture this move is the intraday breakout. And that's another trade that I don't like. I don't like intraday breakouts. I like daily chart breakouts. So you're showing me an intraday breakout at 11:30. Sure, it leads to this great upside move throughout the day. I'm pretty much never involved in that. But one thing that I like earlier in the day, so one, you had a little flag here. If that flag broke up in the beginning of the day, that's something you could be involved in. Or two is I like those when you have a strong market because the market gapped up or because it traded up immediately as soon as the market opens, and then you get that first technical pullback hammer. You haven't established a trend yet as per your question, because a trend is a pattern of higher highs and higher lows, and you're basically looking at the first pullback. So the question is this the first pullback of something that becomes a trend? And the answer is obviously maybe. But I like those early on trades, whether it's a bull flag pattern or, like if you pulled back real quick and then you got a hammer. Did the SPYs do that today? Yeah, like this. And it didn't give follow through, but I don't care. The second 5-minute bar of the day is a hammer into the ADMA. That could be a candle that becomes the beginning of an intraday trend. And if it doesn't, then fine, you get stopped out, maybe you get your risk covered, and then you get stopped out, whatever. If it does, you're very early on something that can last, just on the 5-minute chart can easily last till 10:30, maybe even 11. Then maybe you get some midday digestion, and then you get further continuation, or just get an upside grind all day. Like I really like. But if you're asking me about the Qs specifically today, I could tell you for myself personally, this is a trade that I and very likely not capturing. How would I trade it? When the candle closes, you buy versus the low is the right way. Sometimes I cheat on the candle. If the candle hasn't closed, then it looks like it's probably going to form that way, then I might jump in a little early and try to get a little bit of a better pricing with a potential lower probability of success. But the stop loss is that low for sure. Appreciate the question, Ben. From Greg T, do you think Tesla pushes into 250 to 255 range tomorrow? I have no idea. I think a lot, like, Tesla's super extended. It's very difficult for Tesla to give continuation just on its own accord here. I'll start by saying that. So can Tesla give continuation? Sure. And momentum is a heck of a thing in the market, but most likely only because there's further additional individual stock news with Tesla, or because the whole market's ripping higher because of the CPI for some reason. So if those things happen, then yeah, Tesla, especially above 250. 250 is 25 cents away. But the 250 to 255 range tomorrow, especially if the market's supporting it or there's individual stock news there, then yes. I'm not buying this thing. I don't buy stocks that are this extended. I'd rather look for the short. But if you're looking for the counter trend short, we discussed this last week, you gotta be very, very careful. The with trend side of the market is the easier side of the market to make money on, pretty much always. Which doesn't always mean that just because the stock is going up that it's a good buy, because you want to balance that with extension, right? And that's how I think about it. If I got a good bull trend or whatever, and there's zero extension, knowing nothing else, I want to be long. I got a good bull trend or momentum, and there's a little bit extension, knowing nothing else, I'd rather be long. I got a good bull trend or momentum move, and there's like a good amount of extension, but not a ridiculous amount of extension. Like when I talk about the SPYs or the Qs, that like $6, $7, $8 of extension with SPYs or Qs, I don't want to be long or short. You show me like extreme extension, I potentially want to look for the short with a signal, right? So I would say that where Tesla is that like good amount of extension where I don't want to be long or short, borderlining the extreme extension where I would look for a short with a signal. And again, that's a much more difficult trade. Cool. That was from Greg P. From Ryan C. When you're counter trending trades, do you ever peek into 1 or 2 minutes? Do you stick with the 5-minute only? Also, when looking for volume spikes, I never, like literally never look at a 1-minute chart. I don't want to say I never look at a 2-minute chart. I'm going to say I pretty rarely look at a 2-minute chart. Usually it's just to reference a high or a low that I missed on the tape that was so small that I can't see it in a 5-minute chart. I'm really sticking with the 5-minute. That's really what I'm looking for. And I want to see that broad volume expansion happening in that extreme extension area to look for the trade in the other way. So hope that helps, Ryan. Appreciate the question. From Jordan, unless there is huge macro news, of course, how do you use information on international exchanges to help with morning game planning? Not a whole lot. It's not like a big part of my process. What I do very simply is when Pat at like 7:30 in the morning Eastern, it's his first thing that he posts every day is usually what the futures have done and what the international market has done. I just read it, and it usually says what led higher in Europe and Asia, and I'll just type up real quick usually to see if what led higher in Europe and Asia is leading higher here. Where semis leading higher in Japan, were industrial names leading higher in Europe. And I'll just type them up real quick to see if there's an interesting setup there, or maybe you can get some continuation of that strength that gives follow through in the U.S. markets. It's not something that I've ever seen with such a degree of regularity or continuation that it's a big thing for me. And just kind of a quick look. I mean, even as simple as, like, it's funny how often I don't see this. You would just think that however China traded is how JD and Alibaba would be gapping. And all the time you'll see, like, oh, China was down overnight, but Alibaba's gapping up, or the opposite. Like it's really not like a constant thing, but I pay attention to every piece of information that I see, every piece of information that I gather, and I take a look at it and I just add it to the overall thought process. Sorry. Next question I think is from Rex. Traded Apple at 9.35 and AMD at 9.45. Yeah, I like that. I think I called that Apple out, so sorry if anybody took a loss in that. I liked Apple here. The Qs were where the relative strength was, right, in the first 7 minutes. The IWM was relatively weak. And of the Q names, it looked like Apple was the strongest. Look at the first 2 bars in Apple compared to, I don't know, first 2 bars in Google. Not good. First 2 bars in Amazon. First bar in Amazon was straight down. Amazon eventually became the strongest big cap tech stock that was out there today. But the first bar of the day, which is all the information I had at that time, was not good. Microsoft, yeah, like not great. Inside 5 breaks down. Apple, I thought was the best one, and it tried to break up, probably suckered some people in. Unfortunately, maybe it suckered some of you guys in, especially because I called it out. So apologies for that, but I think it was a decent setup. But in the Qs weakened out, Apple did nothing, and that inside 5 broke down. Yeah, AMD at 9.45. It's kind of a momentum trade there with some extension, but I get it. AMD was very relatively strong this morning. I don't like I don't like $1 stocks. Oh yeah, I got one on there that's much less than it. Yeah, so WeWork is more of a concept idea that's failing, and my game plan is to hold it to 0. I was bullish on the business model for We coming out of COVID. Is basically it, that companies don't want to do a return to office model, but more and more companies utilizing WeWork as a perfect balance of not having to sign up for a 10 or 15-year lease for big companies, but still giving optionality for people to come into an office if they want to come into that office. And the concept was wrong, but my stop loss on it is 0. So holding that one to the death. We'll see what happens. It was really bad more recently when the CEO stepped down, because that was one of the things that I liked also a lot about We, was that CEO had a lot of positive experience in the space. They could still squeeze this thing higher. At some point, it's either going to need to rally to $1, go bankrupt, or do a reverse split, because it's not going to be able to stay listed if it stays under $1 for too much longer. So I'm waiting for that announcement. They'll probably sell it off further on a split announcement. They'll probably sell it off to like 10 cents or something on a reverse split announcement. But then maybe it actually becomes tradable again. It's just not tradable here. So I've got a small position at this point that is just like a concept idea, more than it is a trade that I'm holding down to 0. From back to Ben, no problem. I got back in at 10.37 and still in some for Apple. Okay. Oh, you were in that trade there too. And then you got back in at 10.37. Okay, that's when this thing improved a little bit and broke up. I think that's kind of a tough trade too, to be honest. You needed this thing to clear 182, which it eventually did. And that was when the entire NASDAQ woke up also. So I guess Apple helped wake up the NASDAQ, or the NASDAQ helped wake up Apple. Okay. Let me just check if there's anything on YouTube. Otherwise, I'll wrap it up. Nothing on YouTube. If you're watching on YouTube, give it that thumbs up. Otherwise, appreciate the rest of you guys and gals. And tomorrow morning, get a good night's sleep. We have the CPI. See you then.
Starting at 10, maybe.